Hi, this is Jack from Alpha Charts with the State of the Market video. Today is May 22nd, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's start with the SPX. And it's just a big chop fest, right? I mean, really, it hasn't done anything. Just rotation, and this is a very, very, very tough tape right here. It hasn't quite made a decision. Moving averages are now bunched up together. That's a 9-day and 23-day on my chart today, exponential moving average, and it just really, really, really hard to trade and to look at. So let's look at the Qs. So the Qs are a little bit more interesting right here, right? So there's a couple of competing ideas I have going on in my head with this one. And again, Qs are more likely things that I'm going to trade. So the first one is we're in a channel, right? And we have been in this channel really since September. And the channel is holding so far, right? Everything looks fine with that. And maybe we just go to the top of this channel, somewhere in the 360-ish range. That's a possibility. You know what? Maybe this is making some kind of head and shoulders pattern, which would also coincide with the ABC type pattern that I've talked about in the past also. That's a very good possibility also. Now, as far as head and shoulders goes, I think by far the less likely scenario is that this confirms to the breakdown. I think this 297 to 300 area, if it gets down there, would be a huge, huge opportunity. And the nice thing about that is that if we're wrong, there's very little risk, right, at that level. So, it doesn't have to get there. We may stay in this channel, and as you can see, the moving averages are starting to flatten out and maybe curl back up. So maybe we get another push higher and get to that 360 level. No idea as far as that goes. But I have the scenarios. So I know that if we get some increased strength, then I may, use the higher low, then potentially higher low and go from there. That's a possibility. There are, lower high, high, and then, well, that's a higher high actually. So yeah, I mean, technically the uptrend longer term is intact, and looking at the 200-day, it's still rising, right? It's at 305. Maybe we come down and tag the 200-day. And again, if we just undercut the 200-day, which a lot of people use, that would be right in my 297 to 300 level. That again, I can see that scenario. So a lot of potentials on there, and oh man, it's volume. There's a lot of potentials in there, but all we can do is react to see what happens. There's no way to know what is going to happen. Now, we could look at signs to see if this is more structural in nature or transitory in nature, right? Let's look at IWM and continue our process. I mean, talk about chop fest, man. Big time chop fest right there. Just for fun, let's put the 65 on here. Yeah, look at that. Right there. 65 in there. 9-day, 23-day, and it's just a big chop fest. I'm gonna just let me change that to, I don't know, green. Yeah, blue. Let's see, blue. All right. So there you go. They're all bunched up together. Maybe it runs support, maybe it doesn't. Price is right in the middle of everything, within pennies of each other. So it's hard. Let's look at IWO. This is the small cap growth ETF, and still making lower highs and kind of trying to break down here. So growth still under pressure. Maybe this is a false breakdown. I can probably draw some type of, something like this in here, right? Potential false breakdown in here, something like that. I don't know. We'll see if that, the RSI didn't quite get to oversold, bounced up. Yeah, So now we have a level to measure against, right? Um, but I think that things are still declining. I wouldn't trust this rally. We still could do an A, B, C in here, and the measured move would be about 12 and a half. If this is the top of the measured move, roughly 257. If it does give me some kind of ABC pattern and growth, I don't know. But again, we need to see here is maybe some chop, let these moving averages kind of catch up, build the right side of some type of base, and then a move higher. Maybe this is one big base right here, and this is the left side, and now we got to make the right side. That's a very good possibility, but we're not there yet. So, take it as take it what market's giving you. All right. Looking at the ETFs, XLF still a leader, looks absolutely fine. So XLF has been leading all the way since February and hasn't looked back since. I mean, basically, it's been holding the 23-day the entire way. SMH, again, so it lost my trend line, right? Tried to regain it, didn't. And now we have basically a range. I'm going to get rid of this trend line, actually, because I'm not sure if it adds any value right now. Yeah, so basically it's just in a sideways range. Again, looking at all those moving averages, what do you see? Really flattish and not doing much, right? I mean, price is right at all these moving averages, nothing going on. Just a big choppy mess, man. Just not showing anything. If price can get above 257, that's a different story, right? If it breaks down below 217-ish, different story. But right now, there's really no signal in there, right? You can't say, once we see semiconductors leading again, I think that's a big deal. But until then, there's just no signal in there. Again, it's just indicative of a chop fest and growth really getting hit hard. Everyone's talking about lumber, right? Again, we've been talking about this. Well, we always talk about this more as an indicator than a trading vehicle. People talk about this type of move in lumber, and it's starting to roll over. So that could mean more pain. Looking as an indicator, more pain. In the next 6 months or so, going into the second half of the year. Doesn't mean it has to be like that. It was obviously extended to the upside, but lumber tends to be a pretty decent indicator, and you're seeing the rollover. Would love to see this kind of maybe stabilize someplace and then also build a base. So lumber would be probably a negative rolling over, right? Let's look at bonds, bond ratios. Go here, get rid of volume. All right. So, to have this sideways move, two-way moving averages also. Here we go. All right. Had this move, it did make a slight higher high right there, but really hasn't done much. Moving sideways. So when I talk about like structural issues, like if there were structural issues with this market, we would see things that looked like this, right? These big, big, big swings, right? We don't see that. So I'm still in the camp that this is just a chop fest, normal pullback. When you look at Qs, just to, top to bottom, what are we talking about here? If we call this the top, 7%, even if it got all the way down here, 12%, normal pullback. So nothing that I'm too worried about as far as the structural nature of the market. It looks fine right now. Now, if we see bond ratios starting to really, expand and move higher, that would get me way more defensive, but we don't see that. Let's look at the 10-year real fast. 10-year yield. This obvious trend line didn't matter at all, but maybe it's making some type of base and maybe it moves higher. Again, it's the quick move higher that worries me. And again, we aren't seeing that at this point. So, we take what we get. If we start to see these big jumps, this big jump, then that would be something more concerning. Would love to see it get below or even just move sideways. I mean, who cares, right? I mean, rates are still low. It doesn't really matter. Even if it got up to 2, could care less if it chops around to 2. But that's the thing. We want to avoid quick moves in bonds, TNX. All right, let's keep going. Let's look at the VIX. VIX, within a nice range, kind of came down. You had the one big spike, but nothing to see here. Not too concerning. Just looking at the VIXN. Nasdaq volatility index, again, also doing just fine. Nothing really to see here. Put call ratio, equity only. We had the spike up here to almost 1. Within character of this particular market. And so far, we haven't had any other issues. So with that being said, nothing to see here, no real signal. In April, this was, maybe a potential signal, but overbought is not that big of a deal. It's the oversold signal, which is really, really good usually. So again, we're right in the middle in this choppy range. And again, this is just showing that, the market is whipsawing people back and forth, bull, bear, bull, bear. What do? I don't know. So that's the issue. Value line geometric index. We talked about this divergence here. It's still there on the charts. Maybe this is a little bit of a breakdown, maybe not. It's really just a sideways move. Could this come back down? Sure. If it did, top to bottom, what are you talking about? Oh, look, 12%, right? The same as everything else. So that would be a logical area. We'll call it 600. The divergence again is still there in the value line. So breadth deteriorating a little bit. So I guess that's a concern. Let's look at the QQQE. Again, nothing crazy on the QQQE and RSP. Not ESP, RSP. RSP, just looking at it. I mean, yeah, there's a, you see a little momentum issues there, but again, price is still above key moving average. Nothing really too concerning there. Percent of stocks above the 50-day. Let's look at the line. All right, so you had the big dip again back in May 12th. And then so far, not too bad. You're still making lower highs though, right? So would love to see this, 62-ish%, 63% get taken out. And this moving average starts to curl back up. This is a better look. But again, nothing extreme yet. Like here, right? That would be a very extreme move. But lower highs, lower lows. So breadth, there's still a deterioration of breadth under the surface. So that's more of a cause for concern, right? That could lead to that next, leg lower. Being here, next leg lower. If we were to go down, we're talking about another 8.5% roughly. So that would hurt, right? If we do come down and test this, in this ABC type pattern. And again, the ABC pattern, just looking at it, 8%, and 8% would be right around 303, 304. And like we said, right where the 200-day moving average is right now too, right? So you know what, maybe 304, 305, that's where, that would complete this ABC. And maybe we have some kind of double bottom in the works. This one's kind of sharp-ish. So maybe this one will be more of a rounding bottom. And then we can, with the neckline being 340, and we can potentially, if it is a rounding bottom, draw a trend line like that, right? So that would be definitely something that I'm watching for. ABC, I still think that is a very likely, that's probably my most likely scenario. But I'll take what the market gives. I don't trust, we had 2 beautiful days right over here. Volume was okay on this one, right? That's pretty good on this one. So we'll see. But still, moving averages are just saying, chop fest, all bunched up together. There's the 150, there's the 200, just a lot going on there. All right. So again, I don't think anything structural. I think this is just transitory in nature. And I think that, the scenarios, at least in the Qs, head and shoulder, I am not a fan. I think that, this being a neckline, we could retest to get people bearish. I think that ABC, right to this, we'll even call it the 305 is the target, no lower than 300, 297 to 300. I think the measured move down makes sense. I think the 200-day moving average with a test of that makes sense. So a lot of things coincide with 305. And, it's kind of, we found some support here, in some of these candles over here, right? Yeah, there's 310 right there. There's 305 right there. Again, you see these wicks on the bottom. So that there was some support back there, some price history, some memory. So that's what I'm thinking. Good luck next week. Don't be surprised if we get one more flush lower. Totally good possibility. But I think then, getting to this area is definitely an opportunity to be exploited, as long as our other things that we're watching aren't, blowing up like the bond ratio, right? Hopefully we get some fear. Hopefully put call ratio goes to an extreme fear, with this flush down. Hopefully, we get, people just washing out of everything and selling everything. You see the fear greed index is like that. I also shared this on Twitter a few weeks ago, actually. I'm trying to find it real fast for you guys right now. There it is right there. This is like the market cycle, right? As it comes up. There we go. So where are we in the cycle, right? In some ways, I don't think we ever got to capitulation, right? So that big thrust lower would put us into this area, which we're not here yet. I think we're more like in this area as far as market participants go. I could be wrong, but I'm looking for that capitulation piece, and where everybody gets bearish, everyone hates the market, everyone's throwing in the towel, and then that's the time to pounce. So that's what I got for y'all today. All right. Good luck this week. Take care. Let me know what you like, what you think. If you have different levels that you're looking at or different scenarios, leave it in the comments below. If you like this type of video, please like and subscribe. All right. Y'all have a great week. Bye.